Good morning, good afternoon, and good evening. Welcome to the second webinar in the Elgar series on central banking monetary policy. This week's webinar focuses on the impact of monetary policy on gender. I want to introduce this week's host, Sylvio Kappes, a recently PhD'd scholar from the Federal University of Rio Grande do Sul in Brazil. Sylvio?
Well, thank you for coming. Welcome, everybody. Well, I will host the webinar today, and I will give a brief introduction of the speakers and the commentators, and then I will open to your presentations. So the first to talk today is Elissa Braunstein. Is a professor and chair of economics at the Colorado State University, as well as editor of the journal Feminist Macroeconomics. And most recently, she worked for 2.5 years as a senior economist at the United Nations Conference on Trade and Development. If I say something wrong about your bios, please blame Louis-Philippe. He sent me the text, so it's not my fault. I'm just reading what he sent to me.
It's always his fault.
Yeah. And the second speaker is Guillaume Vallet, Associate Professor of Economics at the Université of Grenoble-Alpes. And as I always like to say, he holds 2 PhDs because one is not enough to him. One PhD in economics and another in sociology. Our third speaker is Brenda Spotton-Visano. Is a professor of economics and public policy at York University in Canada. And then the commentators, Melanie Wenzel-Long, sorry if I mispronounced it, Melanie, received her PhD from Colorado State University and is now an assistant professor of economics at the College of Worcester. And finally, Stephanie Seguino is a professor of economics at the University of Vermont in Burlington, United States. She was the president of the International Association for Feminist Macroeconomics from 2010 to 2011, and has also carried out research for both the United Nations and the World Bank. So we are all here, and Elissa, we are up to you. I think you have to unmute you. Okay, now.
So I'm sharing my screen, but I'm gonna pick this one. Okay. Thank you very much. I'm going to start the slideshow here. Okay, thank you. So I have about 20 minutes, is that right? Okay,
Yes.
So I will try to time myself and be good about that. So today I'm going to talk about monetary policy for gender equality. And I'm going to start by giving a little bit of an overview of feminist macroeconomics, which I think is a concept that not many are familiar with. So feminist macroeconomics tries to link the macroeconomy with gender equality and gendered well-being. And this connection works in 2 ways. First, there are evaluations of macroeconomic structure and policy decisions on men versus women and gendered well-being. Some of the most well-known analyses along these lines look at the impact of labor-intensive export orientation on women's employment. So for instance, in the industrialization process of the East Asian mix, the export orientation really raised the relative demand for women's labor, with consequences for increases in women's labor force participation. I think most recently, a good illustration of this direction from the macroeconomy to gender equality and gendered well-being is the differential distribution of the take-up of care responsibilities in the context of COVID-19. There's a lot of interesting forthcoming work on that. Feminist Macro also looks at the impact of gender equality and gendered well-being for macroeconomic outcomes. So the impact of gender on the structure and performance of the economy. So some well-known studies along these lines look at the impact of gender inequality in the labor market, as well as in terms of human capital, in education and health, on economic growth. Other sorts of studies look at gender-biased access to credit, land, and agricultural inputs and its impact on aggregate productivity. So these two approaches, right, look at these two different directions between the macroeconomy and gender equality and gendered well-being. More recently, a third approach to feminist macro looks at accounting for care and social reproduction. And that emerges in both directions in terms of understanding the differential impact of the macroeconomy on gender equality, as well as how gender relations impact the performance of the macroeconomy. And so I'm going to try to touch on all three segments in this talk to give you a sense of what feminist macro looks like, as well as emphasize monetary policy in particular. So starting out with the impact of the differential impact in terms of gender of macrostructure and policy, I and others, including Stephanie Seguino, who's on this webinar, have looked at the impact, the gender differential impact of inflation reduction and employment. In some early work that I did with James Heinz, we looked at developing and emerging economies and the differential effects of formal and informal inflation targeting by gender. We found that episodes of inflation reduction are overwhelmingly contractionary in the sense that employment declines accompany episodes of inflation reduction. Women's employment suffers a lot more than men's. And most of these inflation reduction episodes were associated with the usual sort of instrument, higher real interest rates. But when these inflation reduction episodes were accompanied by higher real exchange rates as well, women's employment suffered a lot more than men's. Stephanie Seguino has also done some work with James Heinz looking at developed economies and in particular the differential impacts of inflation targeting policies on ethnic minorities. And they find that ethnic minorities, the less educated and the less skilled, see greater employment losses with higher real interest rates. The work on gender is less conclusive, which includes work by others. But there's definitely, in terms of the work on gender in developed economies, there's insufficient accounting for intergroup inequality based on other aspects like race and ethnicities. But overall, I would say that this literature points to the fact that subordinate groups shoulder a disproportionate share of the costs of inflation targeting policies. So, another aspect of looking at this, the gender differential impact of macrostructure and policy that I've been engaged with recently, along with Stephanie Seguino, looks at the impact on gender segregation and neoliberal macro policy. And we started this work in the context of engaging with the narrative around inclusion and expanding the scope of markets among the international financial institutions like the World Bank and the International Monetary Fund, which sees the lack of women's integration economically as a problem largely on the supply side, that marginalized people lack the assets or the skills or the information to participate adequately in the market economy. And this perspective really drives the gender equality and work agenda. You also see it in terms of discussions around financial inclusion, for instance. Instead, in this work, we apply this structure that focuses on the political economy of exclusion and looks at the evolution of global capitalism from a stratification perspective. In particular, how increasing inequality around the world, accompanied by good job scarcity, is grafted onto gender and other forms of hierarchy and privilege. And when I mean good jobs, I'm talking about formal sector jobs with internal ladders of advancement and workplace benefits and things like that. So we looked at this question in terms of looking at the historical trajectory over the past few decades in the changes in women's versus men's employment in the context of what's happening with men's employment overall. And focusing on the left-hand figure, the horizontal axis looks at the change in men's employment rates. And you can see we have 3 different groups of countries here differentiated by the shape of the data point, and most of them fall on the left, which means that there's been a decline in men's employment over the period. On the vertical axis, we have the change in women versus men's employment rate, and most of the countries fall above the horizontal axis, meaning that women's employment has increased relative to men's employment over the period. So as you could also see, most of the countries fall in the upper left-hand quadrant, which we suggest might be gender conflictual in the sense that women's employment has been increasing as men's employment has been declining. The right-hand figure is the same as the left, only it drops out developed countries, and you could see regional developing countries by region. And we do an econometric analysis of these patterns, showing that there's a lower availability of good jobs in global labor markets. At the same time, we see increased gender segregation, and women are more concentrated in bad jobs. We also find that gender segregation is strongly associated with the types of macro policies that we associate with neoliberal approaches, including trade policies, fiscal policies, and policies around capital account openness. And so we argue that due to the declining number of good jobs, women's increased employment has led to their integration on inferior terms. And what progress we have seen in increased relative employment for women is thus gender conflictive. So that's the examples, right, of the direction from the macroeconomy to gender. And here I'm going to shift and look at gender and its impact on the structure and performance of the macroeconomy. A couple of slides ago, I talked about the impact of the concentration of women in export-oriented sectors, which is a good example of this kind of structure. One of the things it can enable through the suppression of women's wages is it can serve as a lever, for instance, for maintaining lower real exchange rates, with implications for the political economy of central bank policy. So, for instance, wage compression among more disenfranchised groups enables sacrifice ratios to be higher for some politically less powerful groups than others. And so finance-friendly monetary policy can then become less politically costly. In the work that I just talked about, we also looked, Stephanie and I also looked at the impact of gender segregation on the labor share of income, and we found this kind of segregation to be associated with lower bargaining power for labor, and that segregation was associated with a 4.7% decline in the labor share in the group of countries that we studied between 1990 and 2014. So moving on to the insights that, oops, sorry. On care and social reproduction that feminist economists have brought into macroeconomic analysis. Social reproduction, as I talk about it in this work, refers to the time and commodities it takes to maintain, invest in and reproduce the labor force. Standard economic growth models don't treat labor as produced or maintained. Most of it is limited, to the extent that it does, is human capital, formal education and healthcare. But this kind of work tries to incorporate a deeper and a fuller, right, perspective on the costs of producing and maintaining labor. And here I have a woodcut that's drafted from the cover of a book by Nancy Fulbray, Who Pays for the Kids? And in this work, we incorporate not just long-run investments in the labor force, but also the daily renewal that we all need when we get home from work the next day. So when we get home from work that day, right, to be able to go into work or to wake up and go to work in our own homes, there's sort of an assembly line, right, of care work. And this is, I think, becoming particularly salient in the current environment with all of us at home and COVID. So I'm going to give you a little bit of the flavor of this kind of modeling and focus on the demand side, where macro policies like monetary policies in particular come into play. And so this approach incorporates both a theoretical model as well as some empirical estimates. So I'm going to give you a flavor of the theoretical model. So on the demand side, it's a Kaleckian sort of model. Gender equality in the labor market, its impact on economic growth, right, depends on the impacts of higher wages for women on production and profitability. And so we come up with two stylized types of economies. One is care-led, the other one is inequality-led. In care-led economies, the relationship between gender equality in the labor market and growth is positive. In inequality-led economies, it is negative. And the reasons have to do with the underlying characteristics, right, of these economies. And the driving factor in terms of the analysis that we do is caring spirits, which refers to the tendency, whether determined by social norms, individual motivation, or public choices or preferences as reflected in the structure of the social welfare state, to provide care or support for care for oneself and others in ways that both add to current production and future productivity. The other features of the model that are important in terms of differentiating between care-led and inequality-led types of economies have to do with the macro policy stance. And because this work was originally focused on developing countries, we emphasized in particular the difference between developmental, employment-oriented types of macro policies and macro policies that were geared towards managing financial openness instead. So there is a supply side, right, to this model, which specifies the distribution of social reproduction. And there's one set of economies which adopts a low road approach where responsibility and obligation is concentrated on women, both in terms of the time and financial costs. But then there's a high road, more gender egalitarian approach where the time and financial costs of care are equitably distributed among men, women, capital, and the state. And so you put the two together and you have this 2x2 set of regimes which combines, right, the demand side and growth with the supply side and the distribution of social reproduction. And so we come up with 4 different types: time squeeze, mutual exploitation, and wage squeeze. And I don't have time to go deeply into all of them, but I think that I want to focus on the time squeeze case, I think, which is where a lot of economies are moving in the current circumstances of COVID, where on the one hand, you have a care-led demand side, but a low road feminization of responsibility and obligation supply side in terms of the distribution of social reproduction. So higher wages for women are good for growth, But as more people are engaging in market participation or maintaining their market participation, time is getting squeezed and there's compromise in terms of producing human capacities. We also make some empirical estimates using principal components analysis of the time paths of social reproduction. Here's an example of how the world is going, where we're generally getting more inequality-led demand at the same time that there's more gender egalitarian supply. But as I noted in the last slide, I think some of those dynamics have been changing in the context of COVID-19. So to close, I want to bring it back directly to monetary policies for gender equality and to highlight some of the points that I and others have made over the years in their work focusing specifically on monetary policy and the kinds of policies that are important to think about and address, in particular policies around credit availability and targeting those, capital management techniques to reduce volatility and to maintain stable and competitive exchange rates, particularly in developing country contexts. But it's important for us to produce gender and race and ethnicity aware real targeting. So we need to disaggregate targets such as employment by these different kinds of groups to understand their effects when adopting different types of monetary policies. But also to supplement these kinds of real targets with more human development oriented targets, right? Employment is a means to an end, for instance. And one thing would be including how the care economy interfaces with the market economy in terms of producing human development. And lastly, some of us have been thinking about this in particular in the past few days, although we've been talking about it for many years, is that it's time to rethink the definition of public investment to include social reproduction spending, so spending on health and education, for instance, is typically treated as consumption spending, which has impacts on things like evaluations of debt sustainability and the availability of funds, right, to invest in human beings. And so I think that that's an especially pressing matter to address in the current context. So I am going to end here. Thank you very much.
Thank you, Elissa, for your presentation. And now we will go to the commentators, and let us start with Melanie.
Sure.
Stop the share.
Great. Thanks, Elissa, for that presentation. I'll just preface my comments by noting I'll be coming largely from the kind of US perspective. That's where a lot of my research focuses on. I've got just a couple of points that are kind of partially comments and partially questions. One thing I'd love to hear more about are maybe the wealth effects of inflation targeting policies. And kind of some of my initial thoughts would be that monetary policy that focuses largely on preventing inflation will have different effects on, well, we already know savers versus borrowers, or lenders versus borrowers, and that might have gender dimensions, certainly intersectional dimensions as well. Another point is I really liked Elissa's point that we can think of these four different types of economies along these two dimensions. And I was thinking that there might not only be these differences, and this is somewhat mentioned in the diagram Elissa walked us through, might not just be differences in the average rate of growth in these four economies, but also the volatility of growth. And that was somewhat mentioned. I'd be curious to hear more about gendering a post-Keynesian theory of crises, as well as a post-Keynesian theory of growth. So I was thinking about how the provisioning of care in economies where the economy may not be care-led, or where the provisioning of care is very inegalitarian, could generate that could itself generate instability. So, for example, in a system where the risks associated with care are highly individualized, put on the individual versus on the society as a whole, it seems like that opens the door for crises, right? When education, the cost of education, of medical care, of elder care are increasingly individualized, individuals have to take on debt, for example, to fund that. And that seems to open the door for a highly unstable situation once households can no longer refinance debt. And I'll end with just two comments relating that to the Elissa's paper to the current downturn. I was kind of curious if you had any thoughts about how a care aware and gender aware counting of kind of macroeconomic changes would change how we're measuring the extent of the downturn in the case of COVID-19. It seems like it could go either way, right? That there's more provisioning of care in the home right now, but at the same time, the quality of care provisioning may be suffering as people's own health is impacted and as the ability to physically provide care has suffered. And lastly, if you have, and of course for time, you may not be able to get to all these questions, but just one last one, looking ahead, I was wondering if you had any predictions about how the current crisis is going to affect the kind of economic regime we're in. Is it going to move us more towards a high road, care-led economy? We've seen a lot of articles in the popular press, pointing out that the unequal distribution of care responsibilities has been brought to the forefront with what's happening. And do you predict that that's going to actually lead to any change? Thanks again.
Okay, so Sylvio, do I respond?
Yes.
Okay, great. Thank you so much for those comments and questions. They were great. So in terms of the wealth effects, I think that they're mostly in terms of the motivation and thinking about these kinds of models, right? I think mostly in terms of borrowers, but you are absolutely right. I mean, particularly in a developed country context, right, in terms of thinking about the gender distribution of savers. And I think that there may be some interesting things to do there. Another aspect that I always put a footnote in these papers about, but still needs to be sorted out, is what does saving mean if we incorporate care, right? So I'm talking a lot about investment, but saving is not just financial saving, right? But there are also some aspects, right, of social reproduction that I think we might be able to think of in terms of saving, particularly if part of investment, as I said before, is producing the labor force. We could also think of saving in those terms. In terms of the volatility of growth, yes, right. It is in terms of the contradiction, when there's a contradiction between the demand and supply side of the economy, we would expect there to be more growth volatility. And actually in an empirical paper that Stephanie and I are finalizing now, we look at growth volatility in terms of the contradiction, and we find evidence that there is more growth volatility. So I think, yes, that there is an aspect here to draw into more post-Keynesian theories of volatility and crisis. The important thing to note, though, is that the volatility or crisis, right, emerges from the contradiction with the social reproduction sector, right? And so that's part of the intellectual project, right, is to sort of try to convince my post-Keynesian colleagues that crisis can come from the care sector, right, as well as traditional financial sectors. So in terms of your points about how are we measuring the downturn, and I think you answered them very well, right, in the sense that it could go either way. On the one hand, right, if we measured the care provisioning that people are doing in the non-market sector, right, the decline in production, right, being market production plus non-market production would be lower. But then there are other things to incorporate, such as the quality of that production, as well as the sort of time squeeze kinds of dynamics that I was talking about, which has an impact on productivity ultimately too. Where are we going? Oh my gosh, this weekend has been so horrible in the United States that my tendency toward optimism about these things, that this is a really big opportunity for us, I think, to forge a more enlightened future. So I'm going to stick with that, and I hope that we do. That's why it's important to continue to have these conversations. So thank you, Melanie.
Well, and now let us proceed to the second commentator, Stephanie Seguino.
Hi there. This is a little awkward for me to be commenting on some papers I wrote with Elissa, but I actually wanted to say, Melanie, I really appreciated your comments and want to see if I can sort of add something to the mixture of both of those. First of all, I think that the notion of focusing on the wealth effects of monetary policy and gender, as well as race, is something that can be further developed. I appreciate that comment. This notion of gendering post-Keynesian theories of crises, and in particular the possibility of a crisis that comes from the care sector, is exactly what we're living right now. We have seen, the shift to households of care work, and the impact that this can have on productivity, for example, is significant. And macro models probably could incorporate that effect. There's a lot of evidence that men's are increasing their time on care, but a very interesting study found that 45% of men said that they were doing more homeschooling than their wives, and 3% of women agreed with that. So I think there will be some improvement, but nevertheless, time poverty is continuing is exacerbated. And just to give you an example from my own institution, in which I am, engaging in some response to, just up and closed the childcare center, fired all the workers, no advance notice, due to COVID, they argue, and the fact that they had to subsidize that, but the impact is disproportionately on women faculty, and of course the women workers that were laid off. And so there are many ways I think you can engender a crisis, if you will, and I think that's a really interesting line of work. Let me just say one final thing is I think what this work shows, and I think it is very important work, and I really appreciate post-Keynesians being willing to engage in this, is that we now understand more fully that monetary policy has distributional effects, and is gendered as well as classed as well as raced. And I think it behooves us to pursue that further with regard to modeling and policy discussions. I also think that this crisis is opening up the door to alternative monetary policies beyond simply interest rate policies. And so you see the expansion of alternative policy tools, and a possibility of the return to developmental central banks. And so I think that it also is worth further investigation and expansion in terms of our understanding of the distributional effect of those types of policies as well. But also for us to really invest more significantly in discussions around alternative policy tools beyond interest rate policies in general, and then the way that they are distributionally, the distributional effects that those types of policies would have as well. So for example, in the United States, I'm doing research on some other fiscal packages as well, but the focus on the loan guarantees and the loans to businesses have disproportionately benefited large corporations rather than women and minority-owned businesses. And even in the case where those funds are going to small businesses, we have rampant evidence that banks discriminate against people of color and women in banking. And so that's another mechanism by which a monetary policy from the top has to operate through an institutionally gendered and raced financial sector. So it's not just what decisions central banks are making, but also what is the structure of the banking sector, what is the oversight and regulation of the banking sector, because that's a mechanism by which even well-intentioned central bank policy can go awry. That's it, thanks.
Elissa, do you want to say something?
No, I think I think it was great. It was nice to have Stephanie's follow up there. Yeah, thank you.
Okay, so now we are open to everyone who wants to ask a question or make a commentary. And I already have here that Hassan Bougrin wants to ask a question. So we will start with him. And if anyone wants to ask something, raise the hands or unmute themselves, then we can make the discussion.
Can I start, Sylvio?
Yeah.
I'd like to start by thanking Elissa for such a great and clear presentation. I took notes of all the statements, and I think they're great. But I do have an issue with perhaps the line of arguments that focuses on gender specifically, as I would also with any argument that focuses uniquely on race, and ignore completely the issue of class. I really believe that when, for instance, Elissa, you say there's a concentration of women in bad jobs, it's a true statement. But what kind of women? You wouldn't find like a see a white rich person in there, that's for sure. So yeah, they are women, but they have to be necessarily of a different class, social class. And I think this is embedded in your line of arguments, as I said earlier, because you refer to these as forms of hierarchy and privilege. Well, that's class. So class analysis is needed, I believe, to really strengthen your statements and arguments. Other than that, thank you. I fully support your conclusion.
Thank you for that comment. I agree. I agree with what you're saying. I mean, I think that it's essential, right, to have intersectional analyses, and of course, there are differences, right, among women. There are, though, doing macroeconomic analysis and trying to understand how the gender division of labor, right, and hierarchies of gender are grafted onto class, right? It's not reducible to class, but it interacts with class. And I think, for instance, our analysis on how women's concentration in bad jobs has an impact on the labor share of income is, right, an effort to illustrate that interaction exactly that you're talking about. So it's not to say that every woman is in a bad job, but to the extent that gender dynamics, right, are integrated with capitalist dynamics. And here I actually took out a bullet point because I didn't have enough time, I felt like, to talk about it, but about the, contradictions and complementarities between patriarchy and capitalism, right? We are talking about these kind of macro systems. It doesn't mean that every individual in that system is oppressed, right, in the same way. But it's important, I think, to highlight the specifics of gender dynamics in addition to, right, connecting them to these other forms of hierarchy, right, and privilege. And that is the sentiment that we talk about throughout the various papers that we've published along these lines, but it's hard to convey that in a big macro overview presentation. So I appreciate your comment.
Hey, thank you, Hassan, for the question. Sorry, someone said something. I heard. Stephanie, yes,
Yeah,
please.
can I just respond? You know, I think one of the challenges, the issue of race, class, and gender is important. And the reality is that race and gender and race and class do not perfectly overlap. People of color who are high income and high status jobs disproportionately lose their jobs relative to whites in those jobs. Data from the analysis that Elissa referred to that James Hines and I did showed this because we controlled for educational attainment, for example. Similarly, with regard to gender, gender and class do not always perfectly overlap. And the issue is around the disproportionate probability that women, including low-income women or low-income people of color, are affected is important. So, you know, I think as a profession, we have a lot more work to do to more deeply understand this issue of intersectionality and the fact that at times these categories overlap, but it's not a perfectly overlapping Venn diagram. Race and gender in and of themselves create vulnerabilities that simply being low income does not create. I also wanted to respond to Paul Tulloch's comment in the chat box, and he asked, how do we bring macro policy into the informal worker sector where women are and low-wage workers predominate? I mean, one of the things that some of us have talked about is this notion of using central bank policy, for example, for asset-based reserve requirements, in which banks are required to keep a certain amount of reserves on reserve at the central bank at no interest, or to invest in targeted sectors. One of those could be small and medium-sized businesses, or businesses that in which there are a lot of informal workers, that would cause those businesses to be registered and therefore lead to their access to these funds, but also greater oversight of those factors. So I think that's a great question, and I actually think it deserves a lot more work. But I think there are mechanisms such as these asset-based reserve requirements that could address that.
Elissa, do you want to further comment on Paul Tulloch's question?
Yeah, well, thank you. Just to echo what Stephanie was talking about in the last slide when I went through and talked about different central bank policies, I think the asset-based reserve requirements is a great example of the kind of developmental, right, targeted central banking policies that would address these kinds of things. There are a lot more kinds of policies that can be adopted than just interest rates or exchange rates. And your question, I think, illustrates exactly why that is the case.
Okay, so now, due to the time that is going away, we will proceed to Guillaume Vallet's presentation. And if at the end of all the three presentations, someone has any further question to Elissa or Stephanie, then we might open another space, but now we must go to Guillaume Vallet's presentation. So Guillaume, please, the stage is yours.
Okay, thank you very much. Can I share my screen? Yeah. Can you see my screen?
No.
No.
Oh, now it's
Is it okay like this?
Yeah.
Okay.
Yeah.
So first of all, thank you very much, Sylvio and Louis-Philippe, for your invitation. I am truly honored to be part of this seminar with such eminent specialists. So thank you very much.
Well, we had no choice. We had to include you since you're in the book and you're editing it. So
this is the advantages of quotas. So thank you very much, Louis-Philippe. No, more seriously, I will not focus on monetary policy per se, but on another neglected and underestimated issue, namely the relationship between monetary policy and the gendered dimension of internal organization of central banks, and more broadly of the gendered feature of the culture of central banking. I had the opportunity to conduct 6 interviews with women central bankers. Some of them wanted to stay to remain anonymous, and this is why I'm going to quote or to use some of their testimonies in my presentation. And with Louis-Philippe, we have also undertaken a survey in 3 central banks in order to ask the personnel of these banks how do they find their and how do they feel their internal organization, especially regarding the gender issue. So just a few words before delving into the core of my topic. I just want to remind that in a perfect world, central banks are supposed to be the bearers of what the French institutionalist authors, such as Michel Alieta, call the hierarchical confidence in money. This confidence rests on the trust users place in this institution, which hold their money. And this is why central banks are supposed to produce public good to the benefit of nation, following complex principal-agent relationship. Central banks are supposed to embody society's preferences, and symmetrically, people are supposed to trust central banks. But of course, in reality, it's more complex than that. There is the issue of the independence of central bank, the issue of the control of these non-elected members who work in central banks. And of course, there are multi-level principal-agent relations. But above all, I think that central banks, in my view, should be considered as institutions exerting what Susan Strange called structural power over the economy and over society. They are able to shape the economy through the regulation of credit growth and inflation in particular. But they are also able to influence society's structures and dynamics. So this is why we should question their structural power, especially regarding the gender perspective. As Elissa emphasized, of course, gender monetary policies are not gender neutral, especially regarding their impact on some economic sectors. If we just look at this table, we have the evidence of what Elissa said, because some countries which are export-led countries can use in some sectors intensive women labor, and maybe are more subjected to change in interest rate or change in exchange rates, and this will entail an impact on these sectors and of course on the situation of women working in this economy. But as I have said, I think we should also have a look on their internal organization, because their internal organization embodies the whole functioning of the institution. And I think we could envision the possibility to assess the impact of an increase in gender diversity. Gender diversity is understood as an increase in the feminization rate, namely the proportion of women and the participation rate of women, high occupancy of senior positions by women in central banks. I don't want here to rest on a kind of, I don't want to essentialize this question. This is about culture and not about nature in my view. But this is really important because gender diversity could trigger new opportunities in central banks. And this is what I want to focus on today. Because in my research on the topic, I attempt to argue that diversity, gender diversity, could help to promote the ability to reach new central bank objectives, the ability to improve cooperation within the organization of the central bank, and the ability to promote the culture of the institution, which in my view has become more and more important regarding central banks' social legitimacy. Because organizations, an organization is not disconnected from the global functioning of the institution. In my view, it's a kind of ecosystem in which diversity matters, because diversity could strengthen the cohesive wholeness of the institution. The organizations of central banks are evolving structures founded on the social interactions created therein, which form a coherent and cohesive emerging system. These organizations cannot be considered the incarnation of a bundle of contracts defined ex ante and complying with the bureaucratic nature of the organization. The central banks are mobilization structures enabling change and empowerment. These evolving structures enable each central bank to reproduce itself as a specific entity in relation to a given context. This is why, for instance, even though the European Central Bank and the Swiss National Bank share the same objective regarding inflation, it is not exactly the same working in the European Central Bank or working in the Swiss National Bank, because they embody different culture, different history, and I think it has become more and more important. And this is why the adhesion of central banks members to these properties is decisive, not only for the efficiency of the the organization itself, but for the institution itself. And I think gender diversity could help promote this kind of culture of the institution. First, just some figures to be reminded regarding the male-dominated culture of central banking. Up to now, there are only 15 central banks in the world that are aided by women governors. If we look at the data that has been built by the OMFIF institution, we can find some indexes indicating the degree of gender equality within central banks. The index identifies the presence of women and men in the governing bodies of central banks by weighting their number by their hierarchical importance in the institution. The global score index of each zone calculates the ratio of women to men weighted by coefficients. If we add a perfect equalitarian world, the scores should be at 100. So you can see here that some zones are far from this perfect equalitarian world. And this is why at stake is, of course, the situation of governors of central banks, but also all the personnel, all the staff working in these institutions. So why is central banking a men's world? For me, in my view, the main problem for women in this sector, but it is the same in other fields, is because there is a discrepancy between power and authority at the expense of women. When women are outsiders of these institutions, it's difficult for them to enter these institutions, to access the power of these institutions. But when they are inside, when they become insiders, they face another problem because their authority is challenged. And for me, there are 5 main problems explaining such a discrepancy. First, the problem of their position. If you were previously a member of central bank, you can increase your chance to get a position, a high position in this central bank. This is the case of Jay Powell, for instance, in the Fed. Jay Powell has only a PhD in law and not in economics, but he has been working in the institution for more than 30 years. So it helped him to access the top position. And this is not the case for women. Secondly, regarding their academic background, there is, of course, a growing number of women educated in economics. However, the proportion of women is far lower in macroeconomics and in finance, the specialty required in central banking. And this is why, for instance, Christine Lagarde, the governor of the ECB, has launched very recently a grant entitled Women in Economics in order to help women studying economics to apply for jobs in central banking. And maybe the time is running, so I'm going to accelerate, but there are also other phenomena which are negative for women. This is why I have, for instance, put S at the word ceiling, because I think within the institution there are several difficulties for women. There is not only one glass ceiling, but at every step of the process, in every dimension of the organization, I think women can face difficulties to access the best positions. So I think there could be some advantages in promoting an increase in gender diversity in central banking. And this is why I think it's important to rest on a new kind of expertise in central banking. The first one is what I call the managerial expertise, in order to rely on new kinds of leadership and new kinds of way to manage people within the organization. Because the leadership and human management are enmeshed in moral relations, decisions, and activities. And I think it could be important to, for the whole institution to rest on this kind of managerial expertise, promoting new features of new dimensions of central banks. And if we look at the data coming from the survey, we can see that many persons working in central banks agree with the fact that it could be important to promote the culture of the institution, relying on different types of new types of managerial expertise. This women central banker also agrees with the fact that we should think more about the way to promote cooperation within the institution. And sometimes this is not the case, according to the testimonies, because central bankers think first about their own career, and their career is tied to finance or the banking sector before or after their career in central banking. And that could be a problem for the functioning of the whole institution. But also, in the wake of what Elissa said, I think there is a lack of expertise on gender issues in central banking. And this is why we should also promote central bankers' managerial expertise on gender. It means integrating gender issues in what they call their function of reaction, but also in their agenda. I think this could be really useful regarding maybe the new objectives for central banks or the new mandates for central banks. We are dealing with inequalities. I am talking about climate change, and I think this kind of expertise are lacking in central banking, and time is ripe to promote this managerial expertise on gender. This is why, of course, it's complicated, because I am supporting here a radical change in this kind of institutions. This is about changing the way we think about thinking, to quote Kahneman and Tversky. But of course, when we are talking about progress, changes, especially regarding gender issues, we are facing resistance, particularly when male domination is challenged. And many of the women central bankers I have interviewed are aware of that, or maybe have already experienced such resistance. This is why it's important to stress, following the sociologist Dobin in Kappes, that change could only come if we support voluntary measures and not command and control measures, which are counterproductive. We cannot instruct people to alter their thought processes and their attitudes. A good manager should encourage the personnel, the staff, to reach their own conclusion that diversity is a good news per se, and is a good news for them as well. It's not an issue of women, it's not only the issue of gender, it's also the issue of the better functioning of the whole. So this is why I suggest redesigning a central bank's internal organization in favor of women in 3 steps. First, I think it's important to decentralize and to collectivize the decision-making process. And the majority, if you look at the first table here on this slide, a majority of the personnel working in the 3 central banks I have mentioned agree with that proposal, because decentralization is more inclusive both for men and women, and this helps people working together. Secondly, we could create new organs in central banks, and Veronica Artola, the governor of the Central Bank of Ecuador, agrees with that idea, because when you create new bodies, you can support creativity, gathering new types of individuals, and that's important for the institution. Of course, especially because Veronica Artola is very involved in gender issues. In her mind, it was new bodies, new organs, gathering more women. But if we look at the data coming from the survey, although staff agrees with that proposal, in their view, this will be to include more business leaders. So it is not exactly the same regarding this topic. And finally, I think time is ripe to promote new types of recruitment policy. Central banks should hire new profiles working in central banks. Andrew Haldane from the Bank of England supports this idea, but if we want to deal with new profiles, if we want to deal with gender diversity, I think it's time to turn to other social sciences, for instance, in central banks. This is what the Ecuadorian Central Bank is already doing, because it hires more and more historians and sociologists, but I think it's not enough. And in my view, this could promote change within these institutions. And of course, hiring more women is first an objective per se. It is not normal, neither nor fair in democratic societies to not have women working in central banks. But I think it's also a challenge for the community of central bankers itself. This community has the reputation to be a closed-off group, to be disconnected from the real needs of people. And at stake is the legitimacy of these institutions. So it's important, in other words, for these institutions to embody the whole functioning of society. To conclude, I think, as in other fields, the crucial issue is also the nexus between the professional sphere and the domestic sphere. Many economists working, women economists working in central bank, or central bankers, women central bankers, admit suffering from these difficulties. This is why the Central Bank of Ecuador has created a room for lactating, for instance. This is also why this central bank wants to support new policies enabling people to take care about their kids, either women or men, in order to promote equality. And regarding what Hassan said previously, I think it's also, of course, important to connect the issue of gender to other types of domination, because sometimes they overlap, sometimes not, as Stephanie mentioned. But of course, this is also about the way we are doing economics, and this women central banker remind me during the interview that it's also about the adhesion to the orthodox culture in economics, and this could be also very important regarding the case of women. So thank you very much for your attention.
Thank you, Guillaume, for your presentation. We'll proceed now for the commentators, starting again with Melanie. But first, Guillaume, would you mind to stop sharing your screen so we can go to the gallery view and see everybody?
Is it okay?
Yeah, fine, thank you. And so Melanie, please, it's up to you.
Great, well, thanks for that presentation, Guillaume. It's really an important point, I think, to bring our attention to the diversity of voices, represented in central banks. Not something I've seen discussed before, but an extremely important point. I just wanted to highlight one thing that I really appreciated that you brought up, was this relationship between the ideas represented among the individuals working in central banks and this question of diversity, specifically the idea that we might bring in central bankers or people to work in the central bank from other disciplines other than economics, and that this would simultaneously help with the basic issue of gender representation, knowing that economics has some challenges with the representation of women in the profession, but it would also, and I think this is equally important, bring in a new set of ideas that are more gender aware, right? I've heard the argument before that one reason why women are underrepresented in economics, and particularly in certain sub-disciplines, is because mainstream theory has been so kind of gender unaware, right? Focused on, or I should say not focused on, issues of distribution and identity, for instance. And so you could make perhaps a similar argument with representation in central banking, right? To the extent that monetary policy has not been aware of its distributional effects, if we can start changing that, perhaps by bringing in voices from outside of economics itself, that could catalyze a change. You also mentioned the representation of heterodox economic thought, and I think there's a very similar argument to be made there. So I just wanted to recognize that point. I think that's a great one. First, I had two quick questions about the empirics that exist on this issue. So first off, I was curious if you could give us a little more context about changes in representation of women among central banks over time. There were a few recent years you point out, and it looked like that there have been quite a few different directions of change in North America, for instance. That index had really fallen over the last couple of years. Overall, are we seeing things improve, or has it really been kind of stagnant? And similarly, on the empirical side, is there any other work showing evidence that changes in the composition, changes in the gender composition of central banks have actually impacted the policy choices that have been made? It kind of relates to another point I came to mind about whether a critical mass of female representation or representation of any group is necessary for change to occur in monetary policy. I think there's a literature on this in the context of corporate boards with a kind of tipping point argument. I wonder if that would be relevant here, if you have any thoughts on that. And then just one kind of clarifying question. You mentioned that having greater representation of women within central banks might promote greater cooperation within central banks. And I was curious if you could explain a bit more about why you think that might occur, right? Does that maybe link to, I think you'd call it the expected attitude of central bankers and of the kind of status quo, and how you think that would impact monetary policy if we do generate greater cooperation within central banks? How might that change the policies that come out of them? Thanks.
Thank you very much, Melanie, for all these questions, and which are very relevant. So this is just the beginning of this research, which is, in my view, quite new, because in general, we focus on the distributive impact of monetary policy, but not on what's going on within this box, if I can say so. This is why I have turned to organizational studies, for instance, the literature on organizational studies. And it's not, the literature is not conclusive. We cannot say that if we just add, for instance, 20% of women, this will entail mechanically plus 20% of performance, for instance. And there are a lot of debates regarding that. This is why, regarding companies, for instance, most of studies don't find specific positive impact on economic performance, but they find a positive impact in general regarding social performance of companies, because the positive impact of more women within these kind of organizations is that they are more aware of the group or the well-being of stakeholders within the organization. And I think this really matters. And this is why for central bank, I think this could be useful in order to improve the production and the circulation of information within the central bank, but also in order to promote the culture and the reproduction of the institution itself, as I have mentioned. These are neglected issues, but when you are proud to belong to your institution, when you are happy with your job, you are going to do more for your institution. And this is why, for instance, to quote her once again, that Veronica Artola is very aware of that dimension of the job. Working in the central bank of the institution is very important because you are representing your country. So this is why we should develop new expertise regarding this ability of each person working in the institution to do so. There have been some studies comparing the performance between women governors and men governors. For instance, there is the study coming from Diouf and Pepin, which have compare the performance of these two types of central bankers, calling them hawks or doves, for instance. So I could send you the paper if you are interested in this issue. And finally, yes, it's always difficult to define the kind of threshold regarding the right number of women in one institution, and because there is no magical number, of course, and also this is not you cannot only change the position of an individual, for instance, if you don't change the whole functioning of the institution. This is what the French sociologist Sophie Pochic called the trap of elitist equality. You just change women, for instance, Lagarde for the ECB, and you just, after that, you think that the whole institution has changed. No, this is not the case. But if you want just the name of a study, the study of Counter in 1967 in the American Journal of Sociology defined the critical mass of 35%, at least 35% for women if we want the organization to change. I hope I have answered your questions.
Okay, thank you, Guillaume. Now we go to the second commentator, Stephanie Seguino, and we already have two questions after that. Paul made a question on the chat, and Giovanna raised a hand, so we will go to them after Stephanie made her comments. So Stephanie, please.
Great. Guillaume, thank you for that paper. I thought it was really interesting, and I wanted to first of all commend you for indicating initially that you were not trying to essentialize women. I really appreciate that. This is, true along a variety of trajectories, that it's really our social experience that informs what we can contribute to an organization. It's not, anything intrinsic in our gender or race, but the experiences we have that allows us to reflect on the impact of an institution, for example. So thanks so much for that. I want to say a couple of things. One is I had the same question. Brenda, your name tag says Melanie, and that's why I called you Melanie. But in any case, Brenda's comment about, do women managed central banks behave differently is an interesting one. And thanks for responding to that. I think more generally what I'm thinking about is, for example, the mandate in a number of countries, including Norway, that requires corporate boards to be 40% female. Recognizing that diverse organizations perform better than homogeneous organizations. And in this, I'm referring to the work of Scott Page. He's a complex systems theorist. He's done a lot of modeling on this, and he has found that if you have a group of homogeneous folks who have, very high IQs compared to a lesser group, if you will, intellectually, but that is more diverse, and you give them problems to solve, actually, it is the more diverse group that can solve problems more quickly because there are more ideas around the table. So there's an efficiency argument, not just a fairness argument for this. And I think that that's part of the motivating factor for requiring corporate boards to be have better gender representation. So I wonder what you think about that with regard to, for example, central banks. I'm trying to think this through myself, but wanted to ask you what you think about this issue about sort of diversifying central banks, not just as the lead central banker, but central bank governors and so on and so forth. What you think about that with regard to the notion of independent central banks. Is that something that contradicts? Is it something that reinforces independent central banks? And I do wonder, in the context of where we are today with COVID and the reaction of central banks, whether in fact we are going to be lessening our emphasis on independent central banks and recognizing that they do have a more developmental role. the third thing I want to just reiterate and is this notion of reorienting the goals of central banks or the objectives of central banks when you have more diverse experiences around the table. So, you know, I think that's a really, that might be something that might be empirically studied if we have enough women central bankers to see if the priorities of central banks actually change. Not only do they perform better, but is there more emphasis on employment, for example, or alternative policy tools that help us escape the straitjacket of a restricted focus on interest rates. And finally, the last, I think your last point was around the issue that this is, the issue is not so much around gender, but ideology of central banks. And, you know, maybe fewer women economists are neoclassical than men. And so they have a more narrow pathway to that door. I want to encourage you to look at stratification theory that I think is a framework for understanding these dynamics with regard to central banking and representation within central banks. I think it might be a helpful way to frame that because it's beyond a gender issue. You know, it's as much about class, for example, and clubs, for example. So I think that would be helpful, but I really appreciated your paper. It was great.
Thank you very much, Stephanie. Thank you. Your questions are really relevant, and I'm really happy to try to answer them. I totally agree with you regarding diversity within internal bodies. This is why I talked about the ecosystem, for instance, because when you open groups to diversity, you are going to connect other ideas, and this will build new bridges between people. To some extent, this reminds me what Mark Granovetter called the strengths of weak ties. And the more diverse the group, the higher the ability to foster creativity. So I agree. I agree with you on that. Secondly, regarding independence, and especially with the current crisis, I think independence has become a misnomer. We always know, we know now that central banks are connected to governments, and this is required. We also know that we need to question the role of elites in society. So you mentioned some works on social stratification, but I think it's also an issue of the role of elites in democracy. I think we are experiencing a crisis of the role of elites in democracy, and this is why one of the problems. We have talked about Trump, but we could also say the same thing for different reasons in France, because elites are accused to be disconnected from the real needs of people. This is why, in my view, we should rethink the framework in which central banks act. We should move from independence to social responsibility, because when you are responsible, you are going to be accountable towards people, towards society. And this is related to what I have said regarding the creation of new internal bodies within the central banks, maybe including people or representatives from the civil society. But, and this is your third question, it's very difficult to talk with central bankers because they are really functioning like closed-off group. When I talk to them, many of them said, "Oh, that's a very interesting topic to work on gender or this issue." And I said, "Okay, so it means that you are ready to open your doors and to authorize me to conduct the survey." "Oh no, we don't want to do so. because of the independence, because of the secrecy of many data. And of course, this is also a matter of ideology, because some women central bankers told me that even though they were quite, for some of them, heterodox when they entered this institution, they became more and more orthodox because it was necessary for them to build their own career. So they wanted to overconfirm the model of the milieu. And this could be also a problem. But to conclude, this is also why maybe we need specialists coming from other social sciences who are not trapped or are not roped in this situation. Thank you very much.
Okay, thank you, Stephanie, for your commentaries. I'm afraid we are already full of questions, at least on this window of questions here, because Paul asked one on the chat, and then we have Giovanna, and Hassan also asked me to ask a question. So Paul, if you can, you please write your read the question you wrote at the chat to Guillaume.
Yeah, it's probably an obvious question, but just out of curiosity, you know, Janet Yellen was appointed as the chairperson for the Federal Reserve, and I was wondering if she had a discernible impact on U.S. policy. I know you kind of covered it already, saying that one person doesn't change an institutional, it's an institutional change, but she was in a fairly, you know, prestigious position. And I think maybe even just talking about it here might be part of her institutional heritage and, you know, getting more focal on it.
Thank you very much. I cannot say which number, but I can say that Janet Yellen was among my the person I interviewed, and she told me that she tried to change the institution, and she was more, in her view, she was more a dove than a hawk. So she tried to set up the monetary policy differently.
Okay, so I think Giovanna have a question now.
Yes. Can you hear me? Is everything all right?
Yes.
Okay. Well, I do have a question and I do have a comment. The question, let's say first the comments and that's the question. If I understood correctly, the paper goes within this broad literature about gender diversity. Already Melanie was speaking about the fact that there is a growing literature, especially in management staff and stuff like that, about the idea that you have more women in an institution or more women in a company, and that will behave badly. Better. And the point, now taking into account that, of course, a firm or a private firm or a company is different from a public institution or anyway from a central bank. The first question that is also related to that is that this idea that having more women in some places, or more women in parliament, for example, or more women in the board of the central bank, will impact the policy of the bank or the institution, I think refers back to the old debate that we had that was in philosophy. In philosophy, there was a huge debate about, of course, in the feminist debate, about the fact that if women behave differently or behave as well as men. So if there is a difference between women when they when they have to behave in a certain environment than men. And I think that behind, underneath this work, there is the idea that women would anyway behave in a different way because they are women and they are biologically different from men, and therefore there is something that, some input that allowed them to behave in a different way. And I think this is something I don't really agree on, but is something that should be investigated more clearly, because as already the author was saying, if women are put in certain situations that at the end of the day, they have the same behavior as men, because the structure of the institution, or let's say the structure of capitalism, is a certain structure. And if you go to work and if you have to be there, you have to follow the rule of capitalism or the rule of the economy, regardless of the sex you belong to. So there is this relates also to the long debate we have in Italy. In Italy, probably it's more deepened in the society, because Italy is a place where women are women are not allowed. They're not very much into political institution, anyway, public institution, banks, and everything. Let's say we are more discriminated than in other developed countries. So I was saying there was this huge debate about the gender quota, the idea that you have to put a law to allow to have some women, for example, the law for the board. So you oblige the board of the companies to have a certain amount of women. You oblige the law of the parliament to have a certain amount of member of parliament women, stuff like that. Now, this again goes, this huge debate in Italy brought back the debate about, as I was saying before, but is it important to have more women if these women do not have any kind of, let's be clear, feminist concept? So you have more women in an institution, you have more women in a company, but if these women do not have any kind of gender consciousness, is conscious, it's completely useless to have more women. So the point is not only, and then I'll explain why only, but the point is not only to have more women, but the point is also, let's say, which kind of woman you want to have. Because if you put, let's say, now I make a stupid example, but if you put Margaret Thatcher at the central bank, probably you, of course, it's not possible now because she's dead, but as I was saying, probably you're not going to see a lot of difference. So as I was saying, it's a question of putting women which have strong feminist and political consciousness, which have gender consciousness, because otherwise I think the difference, you won't see any difference. And this, and I close with this, brings me back to, for example, the fact that your paper would be, from the very radical feminists would be blamed, would be indicated as a typical liberal feminist kind of paper. Because the idea, and I'm referring here to the division between radical feminists and liberal feminists that was developed by Nancy Fraser, Battaraccia, and Cinzia Ruzza in the latest book, The Feminist for the 99%. Now, the idea that feminism and the political impact of feminism is just to have more women, regardless of which kind of women, into institution, might bring, as I said, no difference in a society, because the structure of the society obliges them to behave as well as, to behave the same way as men do. So, and here comes the question, have you thought that it's important also to speak about not only the quantity of women, like quota, more women within board and stuff like that, but also, let's say, the quality of women. So which kind of women you want to put there. And then, of course, you open to the political problems. Thank you very much.
So, thank you very much for your question. Very briefly, maybe, because we are running out of time, but this was my point. Like Stephanie said, I didn't want to stress that we just need a number and we need to essentialize the debate because gender diversity, in my view, is about experience, to quote Stephanie, and this is the most important. And of course, I was referring to skilled women. This was my point when I referred to educated women in sociology, in history, and in philosophy, and so on. But you're right, we have to question all the process And once again, this is why it's important to know more about the decisions of women studying economics at the outset of the process. Why maybe don't they want to go to this career? Why do they want to be specialized in other fields? I think it's important, and I agree with you. But I think it's beyond the debate, the scientific debate. I think it's also important to have this debate regarding the functioning of democracy, as I've said. Because if we don't have this debate, we will reproduce the system, and this is a male system. I did my PhD in sociology on male domination, so I have thought about the way it works, and I know that institutions help men to maintain their domination. So if we don't have this debate beyond the scientific things, I think we will still have only men in this institution, and I think this could be a big problem for the functioning of democracy.
Okay, thank you, Guillaume, for your answers and presentation. We will now move to Brenda presentation and then the commentaries. And if we have time at the end, we can go back to questions that were left behind on the previous presentation. So Brenda, you can go.
Thanks, Sylvio. I'm just going to try sharing the slides here. So yes, thank you very much for the opportunity to join everybody in this discussion. A couple of anecdotes before I move into the presentation. When I teach money and banking, I start every course with a series of questions that I invite the students to respond to. And one of them is about the gender representation and gender participation in various scenarios. And the question is, do they think gender matters? And consistently over the years, these are undergraduate economics and business students ascribe differential participation almost uniquely to individual personality. So proposing that there may be a social dimension, that the fact that there's gender there may explain differential participation is pretty much denied as a possibility. Separately, years ago, when I was president of the Canadian Women's Economics Network, a number of junior women economists would approach me with a similar question about whether, why the fact that they were a woman would differ or matter at all. And it was clear they were strongly resisting the possibility that gender mattered, seeing it as a substitution for the fact that they had knowledge of economics and their ability to employ economic argument. So in these cases, I see it as a way of internalizing the fundamental premises of mainstream economic thinking and primarily, of course, privileging the idea of individual rationality. And I want to start with my talk today, challenging this view that individual rationality lies as the basis of our economic modeling. I fear that it's boxed this notion that the individual is rational has boxed our thinking into a frame that then pits the rational individual against underrepresented groups. And it's that type of grounding that I want to challenge. Specifically in this talk today, I want to explore two complementary lines of inquiry and examine how we might pursue a gender budgeting analysis of monetary policy. To do that, I'll first outline a highly stylized narrative of mainstream monetary policy, picking up the sort of pieces that I think that offer entry points for exploring the gender implications of monetary policy. I want to ID just briefly some problems with core assumptions, briefly introduce gender budgeting initiatives, and conclude with some implications for monetary policy that as I heard it echo some of what was said in the previous two presentations. Next slide. Thanks, Sylvio. So to start, the stylized narrative of mainstream monetary policy, as we all know, conventional and unconventional monetary policy, is framed around the central bank chooses an instrument, and currently they emphasize overnight or the Fed funds rate, depending on which country you're in, allowing for unconventional monetary policy with quantitative easing only in exceptional circumstances. The focus is on possible transmission pathways or the monetary transmission mechanisms in order to address the ultimate goal of inflation, output, and growth, probably in that order. Next slide, thanks. So in Canada, at least, measuring the macroeconomy for informing relevant monetary policy decisions takes the place of modeling an economy around an output gap defined as a capacity output in relation to where we are in actual output with GDP as the principal output measure. The capacity output is defined as in terms of the measured labor unemployment rate and capacity constraints in the labor market and real estate. Inflation is, this is pretty much universal consumer prices, GDP prices, and expectations of inflation. Next slide. So the logic of economic policy there is that this representative individual prefers more income or more consumption to less, and that more income or more consumption to less preferred is driving our focus on economic growth. The representative individual is rational, and this assumption precludes any social location, I would argue. In those two primary assumptions combined, we get the result is that we prioritize economic growth over distribution. There are distributional questions, issues addressed. I don't dispute that, but they are of a secondary importance. And then in order to maximize growth, we've got this current mainstream view that we want to target low inflation in order to achieve that. We focus our economic policies on measured investments, not social investments, and resource allocation to maximize production and employment for consumption and all the familiar competitive market arguments. Next slide. So there are numerous ways that numerous authors have attempted to challenge some of these mainstream assumptions, but here I want to draw on three, one of which has been dealt with really well already by Elissa and Stephanie's paper. So first, does more income make us happier? Remember, this is, I would argue, the key driver of this focus on economic growth. However, the evidence in the social well-being and life satisfaction literature says that more is not better, and more definitely doesn't make us more satisfied or happier above modest income levels. The second question, is there only one efficient or optimal course of action? And of course, this relates to sort of the positivist view of the world that grounds mainstream economic thinking. But what I've argued, and it appears in that short paper that I sent to everyone a couple of days ago, that facing fundamental uncertainty, the choice are many. There's no optimal course of action. Choice initiates a number of path-dependent, self-reinforcing effects like learning coordination, network externalities, etc. And then where are the different motivations of reciprocity and duty? And in the caring labor, we've already heard a fair bit about in Elissa's presentation. So these are the three assumptions that are key to grounding the view of the economy on which monetary policies are decided. But if we challenge each of those assumptions, what would monetary policy look like ultimately. In order to get to that argument, first I want to speak to a gender-focused economic policy perspective if we accept that subjective well-being is what we should be looking to maximize. And in order to do that, because in the subjective well-being literature, what matters is relative income, not your absolute income. More income does not improve your own self-assessed well-being. It is your income relative to others. And so this suggests that we should be maximizing or seeking to maximize it or looking to promote subjective well-being. And that requires that we focus on distributional elements of the macroeconomy. We should prioritize then the distribution over growth and focus on economic policy on investment and resource allocation to promote the more equal distribution, stability of income for consumption, and an intentional distribution of work being between paid or unpaid reproductive spheres, all focused on trying to promote subjective well-being over growth. The implications are, oh, you'll just have to hit the next, yes, thanks. Preferences, subjective interactions, and outcomes are co-constitutive, mediated by institutions, and this is developed more in a couple of the papers, one of which I did send you. But what's important here is that as soon as we allow for subjective interaction, as soon as we allow for the social construction of what it is we're looking at, output, outcomes, who gets to decide determines what gets decided, and who is at the table matters, to Guillaume's point. And it's in this view that we have the foundations of a view of our material well-being, where social location explicitly shapes it. And what's critical is that we have removed the rational individual from this. So I'm echoing here the sort of who is at the table matters is an argument that Diane Elson has made for quite a few years now in her work in macro policy. Next slide, yes, thanks. So under the current health crisis, we've seen, certainly in the Canadian media, we've laid bare, exposed what really is essential about the economy, and it includes healthcare services, food supplies, government supports, and childcare services, all of which are dominated by women in these essential services. The employment is dominated by women, as well as there's a high proportion of, sorry, back one? Thank you. There's a high proportion of temporary labor. And so for those of you who've been following, certainly in Ontario, but Canada, some of the media reports have exposed the hotspots of some of these COVID outbreaks are in long-term care facilities. And the transmission from one care facility to another, so the nursing homes, from one care facility to the other was facilitated by the number of personal service workers who were working across a number of different institutions, patching together temporary, short-term, part-time employment from a number of different institutions in order to make a living wage. And so the fact that we've got this precarious income and patchwork of part-time employment to earn a full-time wage lies at the heart of some of the transmission of the virus, and really, unfortunately, most of the deaths in Ontario. Next slide, please. So the current crisis underscores the critical gaps in mainstream thinking that our prioritization of growth and market employment and market competition ignore polarization of income, downloading of caregiving onto women due to the cuts in social programs that we've seen over the last few years, increasing precariousness of predominantly women's labor, and we've got immigrant and seasonal workers in there as well. We've got women disproportionately represented in lower income quintiles, but we do as well see Indigenous peoples differently abled persons and racialized persons differentially represented in, or disproportionately represented in, these lower income quintiles as well. And so the question for us, I think, is how and where does should social location matter in economic policy making? I want to shift gears slightly on the next slide, please, to now reference gender budgeting efforts and initiatives that we've seen certainly in Canada for the last few years to promote gender equality in federal government budgeting. And there, we've got a Status of Women Canada Secretariat that is supposed to be trying to promote gender budgeting, at least in the federal government sector, in order to promote gender equality. But so there's been this debate over the last few years about what does gender equality mean, and what does that imply for what we mean by gender equality? How does that implicate our gender budgeting approach? So the sort of first level of gender budgeting would be to look for an equality of outcomes that drives what sort of back in the early 2000s was a gender-based analysis. So gender-based analysis was the term that was used to say, all right, well, let's look at these budgets and analyze their effect on women and differentially women in the labor market, for example. Gender responsive budgeting was intended to be an improvement over gender-based analysis, in that it started to address the equality of opportunities. But more recently, we've got an awareness that it's what they've been calling gender mainstreaming, and that we have to address the institutionalized norms and practices that reproduce the gender biases. And so my question really is, what would gender mainstreaming of monetary policy look like? Next question. Next slide, thanks. So gender-based analysis focusing on an equality of outcomes, I think, characterizes a lot of what we're seeing in the early macro literature trying to incorporate gender. So I take, Elissa, your fabulous presentation and your work is definitely pushing it beyond what I'm about to say here. But just for sake of illustration, an example where gender-based analysis focusing on an equality of outcomes looks at women in the labor market, everything else given. And an example of this was a Royal Bank of Canada publication a while back that really, and I love the term, grafted onto the conventional view, conventional economy, more women in the labor market, and estimated that personal income would be higher and GDP would be higher, and that would be great. There was no examination, however, of the structural changes needed to make that all happen. It was just, if we had more women in the labor, here we have this many women, if we had them in the paid labor market, this is how much GDP would increase. For monetary policy, a gender-based analysis would pay close attention to how employment of women is differentially affected by choice of monetary instruments and various transmission mechanisms, for example. So we might focus on how women hold disproportionately less of the outstanding government bonds, if that data were available, which I really don't think it is. And then we would argue that perhaps, we should look at other transmission mechanisms, and focused on, I think it was Stephanie who referred to asset-based reserve requirements. And I think these ways of examining, of engaging a gender budgeting analysis in monetary policy would be fabulous to start and expose the ways in which gender is implicated throughout the entire structure of the monetary policy and financial system more generally. But a gender mainstreaming analysis, I think, could go even further, and, for example, examine how current tax structures that place preferential tax treatment on capital income over labor income has a differential impact on women's income, for example. And so it would be, that would suggest that the policies should be targeting the structure of the tax system, for example, rather than just saying we should get more women to buy more bonds. Not the best example, but I'm still working on that. Okay, next slide, please. So looking beyond this equality of outcomes, we need greater social well-being is achieved through more equal distribution of income. And as others have spoken to, and the research focuses on, the lack of affordable childcare considerably constrains women's employment, and we're seeing this certainly in Canada, exposed very clearly with everybody trying to work from home. Cuts to social programs as a means of tackling government deficits increase unpaid caring labor, and these are all invisible in the monetary macro models used by the central bank, certainly of Canada, to inform its monetary policy. And last point to make here, that the bean counting view of government deficits, so deficit as a percentage of GDP without looking at the benefits of funded programs, risks further entrenching a gender disparity in the way we look at government policy generally, economic policy, and monetary policy more specifically. So by way of an example, the Canadian Centre for Policy Alternatives on the next slide, the Canadian Centre for Policy Alternatives a while back just did a really effective analysis, I think, about the impact of government services by income distribution, and concluded that government services were worth twice as much in income to that of the poorest households. And it's these benefits from public services that we're missing when we talk about the size of the government debt or the government deficit. It's these types of distributional effects, and we could slice and dice this further by introducing gender, race, and different abilities. It's these types of benefits that we need to weigh against the concern over the deficit, because certainly there will be a resurgence and a focus on how the heck we're going to pay for all of these government supports for the economy that have been rolled out in the last couple of months. So to wrap up, last slide, to sort of conjecture on what gender mainstreaming monetary policy would look like. It includes all of these critical dimensions of the gender impact on outcomes, but it also goes beyond that to look at the structures and the institutions, as others today have done, the structures and the institutions that promote that gender inequality. So who is at the table absolutely matters, and yes, I would agree, composition of central bank decision makers are absolutely critical. And I would say that central bankers have to start thinking about those benchmark targets in terms of who gets what, so that the distributional effects of monetary policy become more front and center to those decisions. Income distribution a priority, this is my wish list. Monetary policy goals include distribution benchmarks, that it's not just more growth, but it's who gets that additional or expansion. Monetary policy goals would consider these impacts in terms of not GDP rising, but in terms of well-being indicators. Now, in order for the policy to be guided in such a way, I think that we need to there'll need to be more of the current work being done drifting over to and informing economic policymakers. So the size of the government deficit would be compared to benefits associated with greater well-being, rather than simply counting how big the deficit is, arguing that it's going to crowd out something and that therefore we should cut it. And this last point, of course, has I'm echoing the fabulous work by those others who spend a lot of time researching. But I would argue that these models that we've got need to explicitly include how we're substituting into and out of unpaid caring labor. And in that, we will see better what these capacity constraints are when informing monetary policy and thinking about what that world would look like with central bank active intervention in terms of the fuller well-being analysis, and not just what's happening with growth and what's happening in the paid labor market, of course, and what's happening in the real estate market. So my ideal would be to see that we're going beyond the effects of gender on monetary, the effects of monetary policy on gender, and to incorporate in a sort of mainstream way to get at those institutional sources of inequality, to look at gender on monetary policy. So just flipping the way that Louis-Philippe initially labeled the talk today. And with that, I will close. And thanks again for listening.
Thank you, Brenda. I hope I have managed well the slides.
It was perfect, and thank you so much for rescuing.
Thank you. So we will now go to the commentators, Melanie and then Stephanie. David already raised his hand, so we already have one question after the commentary. So Melanie, please.
Great. Thanks, Brenda, for that presentation. I want to start by just saying how much I appreciate your emphasis on the kind of setting these distributional goals with monetary policy, not just output goals, for example. And I was actually even thinking you could go beyond income inequality in assessing the distributional consequences. I mean, you talked about care, absolutely. That's also important. I was also thinking about wealth inequality, thinking back to the financial crisis, it's pretty easy to see in the data that wealth inequality expanded pretty dramatically right post-crisis, with the most affluent, those with the most wealth, experiencing a faster recovery and smaller relative losses, and those at the bottom of the wealth distribution experiencing the largest losses and very, very slow recovery. And of course, those broad distributional observations tend to follow lines of race and gender as well, with women having lower levels of wealth and there being important intersectional gaps in wealth as well. Kind of looking at the current crisis, I think we're again going to see implications for wealth inequality driven not just by differences or changes in asset values, but also debt burden, as households take on debt as a way of trying to get through this downturn. Medical debt as well, I think, will be really important. And so that's just to maybe address the fact that wealth certainly is linked to income inequality, but might follow its own dynamics that could be important to assess with respect to monetary policy. One thing I was going to ask about, but you ended up addressing it in your talk, was how certain central bank instruments might serve to promote or how they might fail to promote equality of outcome and opportunities. And I appreciate how you distinguish between those two forms of equality. And you did give some examples of how different instruments would have different impacts. I want to add to that, I think it was in a recent IAFI seminar, Diane Elson had noted that the Bank of England's buying up of corporate bonds would have that kind of distributional impact as well, or protecting the wealth of some of the most affluent, not necessarily everyone else. I was curious, just so as a question following up on that, if you could speak to some of the kind of concrete changes in monetary policy, whether that's the kinds of exact targets that are chosen or the instruments used that would promote equality of opportunity, right? So you make this important point that we need to go beyond talking about outcomes to opportunities. Where does monetary policy fit? You talk a bit about targeting these distributional goals. I was just curious if you had some thoughts about exactly in terms of policy, what that would look like. And then finally, I was wondering about the limits of monetary policy here to this goal of dealing with institutional sources of inequality. So you mentioned, I think throughout your talk, some fiscal policy as well as some monetary policy. And I was wondering if you could comment on the limitations of monetary policy. I'm thinking, is monetary policy sufficiently precise to address some of the sources of inequality of opportunity? Or on the other hand, maybe there's political challenges associated with implementing new social spending programs that would support, for example, women's opportunities. Just if you could speak to that a little bit. But I'll wrap up my comments there. Thanks.
Thanks so much, Melanie. I absolutely agree. Just taking your comments in order, absolutely agree with wealth inequality. I've done a fair bit of work on sort of household debt, and especially for the lower income families, and that you are absolutely right. The debt burden, especially in this current crisis, has got huge redistributional effects. And I think one of the more insidious ways in which we're seeing that happen is under the pretense of supporting corporations and ensuring continued employment that will bail out the corporations, that the central bank will acquire corporate bonds in order to maintain corporate liquidity, but not doing the same for, say, homeowners to quite the same degree, has this huge shift in wealth distribution, and I appreciate you making that point. Concrete changes on that where we would see either equality of opportunity move beyond equality of outcomes or even mainstreaming. So I think there's a lot of possibilities there that I could reflect on, not right now. And I have been going back and forth what that would actually look like, and you're right on, what concretely would we see? And I come up with sort of a shopping list of possibilities. So for example, the central bank might rely more on moral suasion. We've only got 6 large chartered banks or commercial banks in US terms. So it's much easier for the central bank in Canada to use moral suasion in terms of the types of portfolios. So if the central bank were to come and say, your portfolio has to have these characteristics for us to address, some of your liquidity challenges in the next little while, then it would be effective. They could use that. But more importantly, I think it's got to lie in taking a framework for the economy that moves the bank out of looking at simple capacity constraints in established, narrowly defined labor markets, for example. And somehow looking at the way in which capacity constraints in the marketed economy intersect or interact with capacity constraints, if you will, in the reproductive and caring economy in the unpaid labor market. How you model that, I think that's a challenge that it sounds like Elissa and Stephanie are well on the way to structuring that, we hope. But something there about bringing visible the currently invisible implications of many of these macro policies that end up offloading labor on invisibly, right? We've got to render that visible somehow in the model so that it becomes one of the criteria that are considered when thinking about how to implement monetary policy. Should it be interest rates through the overnight rate that then affects administrative rates to the banks without any conditions attached? I don't think so. I think that we can add conditions there simply because Canada's structured the way it is around a much more concentrated banking system that would go some distance to improving the distributional effects of monetary policy. But I'll stop there. Great questions. Thank you, Melanie.
Okay, now Stephanie.
Thanks. Great paper, Brenda, and great comments, Melanie. I really like the additional focus on wealth. The discussion of funding corporate bonds and so forth is really a great avenue. I think in the interest of time, I just want to make sort of one general comment that of something I've been thinking about for some time, and that I think is related to this discussion. And that is that we typically use fiscal policy to address employment and monetary policy to address inflation. And I want to just submit to you that actually there should be a reversal of roles, that most inflation is a function of supply side issues like HIV/AIDS in sub-Saharan Africa, illness, and so on and so forth. And that using interest rate policy to control inflation is really ineffective and is not well targeted, and in fact can worsen inflation. I'll give you just an example. Higher interest rates that reduce aggregate demand. Women typically tend to be at the back of the job queue. That means higher unemployment for them, which is what James and I found in our paper. And that means less investment in children, as well as current workers, and productivity falls and prices rise. So it's actually contradictory. You could think about fiscal policy addressing the supply bottlenecks and the challenges around productivity and their inflation, and using targeted monetary policy to achieve these other goals, such as the distributional goals that you're discussing, targeted targeted loans to strategic sectors or groups in the economy that would reduce inequality. So I just put that out there as a way for us to reconstruct what is I think a very neoclassical approach to what is the policy frame of monetary policy, and to turn it around in a way that really is consistent with what we know about intergroup inequality, as well as the real sources of inflation, which in many cases are simply not demand side. Thanks.
Thanks very much, Stephanie. I like the idea of, flipping around our view of policy goals. I'd go even one further with the inflation goal, at least in developed economies, and as some of you know, that tends to be my focus. Okay, that's my only focus. Never mind. Canada primarily. All right, inflation. Have we got an inflation problem? How are we going to have an inflation problem? The only inflation problem we've got is that, they can't use monetary policy in any way, conventional or unconventional, to stimulate the economy. So I wonder if the way in which inflation has, however, it is, how to describe this? I don't think that our views of inflation that we had that were informing inflation targeting back in the 80s and 90s is an economy, I don't think we have that structure, is an economy that we're facing today. And so I wonder about what a problem with inflation means. Really, like I'm imagining if the central bank went and bought up a whole bunch of debt and increased, we did this major expansion of the money supply. I'm not quite sure, at least as it's measured in conventional terms, because we've all got, there are so many structural changes going on with digitization, that inflation is, as we understand it, the same thing as it was when we were thinking about inflation targeting. and monetary policy targeting inflation. This is not making any sense to me, so I'm sure it makes no sense to anyone else. But it's something in the way we're thinking about inflation and the fact that it's been chronically low and lower. Yes, Paul, I'm seeing this like comment flip up. Inflation well is miles away. Yes, let's just, if we want to move it over to fiscal policy, that's one thing. I think on fiscal policy generally, or on economic policy generally, on monetary policy definitely, we need to more broadly inform the benefits against which we measure any debt concerns. And that is, I'm stopping. I need more coffee. Thank you.
So we will now move to the last questions. David and Louis-Philippe will ask their questions. I will ask you to be brief because we are a long time here talking and Brenda needs more coffee, so we gotta be brief. So please, David.
Can you hear me?
Yes.
Okay. First of all, I would like to thank Barbara and the other presenters. I found it very stimulating. I will make it brief because I need coffee too. I want to just say that, Barbara, your mention of real estate or other specific sectors says to me that the idea of universal policies for interest rates, I think, are long past, and there needs to be a clear identification of the structural issues. Take for Canada, the ridiculous idea of treating the oil industry, the tar sands and so on, as having a comparable situation as, for example, home purchases or the array of credit card policies or anything like that is long past. There needs to be a decisive point made about the differential impacts of interest rate policies. The second thing I would like to mention is about how to treat the issue of the feminization of central banks and, broadly speaking, understanding the role of males in it too. I think economic training is a small factor in the attitude that leaders in the central banking and departments of finance take. You know, Christine Lagarde, for example, is a lawyer by training. Father was an English professor. Her predecessor, Strauss-Kahn, father was a lawyer, and his economics is, you know, an issue that one might discuss. Janet Yellen, the father medical doctor, and background, you know, had more economics, and I think she was more dovish. But did it actually matter in the end in an institution that is captured by big banking, especially in Canada? I think that the studies need to go further into history. When I was a graduate student, for example, I don't know how I got the subject, but I was given an essay to do on Helmer Schacht, Hitler's banker, right? Started as a kind of centrist Democrat and then moved into a big supporter of the Nazi Party, was put on trial in Nuremberg for not crimes against humanity, but crimes against the peace because of, you know, how he was involved in financing the takeover of some of the Nazi territories. We do not treat the existing types of central bankers to the same level of intensity for their irresponsibilities on international issues, on basic issues of democracy. For example, what the Canadian system of banking is doing to countries like Venezuela, Iraq, etc., Iran, and so on. And I think our perspective needs to go far further and needs to take up also the, not just of women, but of men who, in a sense, are betraying any elementary level of serious consideration, not only of social science or of economics, but also some basic ethical principles. I just want to set that out because I think our framework is too narrow sometimes in evaluating the institutional consequences of big banking capture. The third thing I would say is more optimistic. One of the issues for me, I actually don't think the central banks can be changed from the inside. But one of the things of COVID that for me, and I see this in Northern Ontario to some degree, but even in the United States, perhaps more visibly, that the unions in the healthcare sectors, overwhelmingly female, are actually leading a major fight that could have implications if it's taken far enough, and especially if it's not blocked by some male-dominated union leaders, to fundamentally alter attitudes towards who should be bailed out in the crisis and the balance of power that should exist after this pandemic. I mention that because it's showing very clearly the importance at a mass level of the labor of women and many men as well in care, and how fundamental it is to society. This is an opportunity, and it has to be taken, I think, by the labor movement to the level of the policy in such things as quantitative easing. But at my labor council, of which I'm a delegate, a majority of the delegates are women. The source of power and change is present. I think it just needs to be kind of broadened, and we need to tie the issues of monetary policy, central bank capture, etc., to this larger question of who is actually going to shift power in the economy. Okay, enough said. Thank you.
Thank you for your brief comment. Brenda, do you want to say something?
Just that, whoops, my notes, David. Thank you for your comments. Good to hear your voice. So your primary point about the structural issues, I agree that we need to move beyond these blunt aggregates. And that's the message that I take away from what I'm hearing today, what I'm reading, what I'm thinking about is the differential impacts, yes, of interest policies on various sectors in the economy, but I would go further than just the interest rates. But I think we need to give some attention to why the social location and the distribution matters. Beyond, we can't argue distribution matters on social location within a model that privileges individual rationality of the neoclassical model. I think it's almost a contradiction in my mind. And so all of the ways in which the feminist economists are starting to explore macroeconomics, or have been exploring macroeconomics and are exploring it more, I think open the door to a different view of the economy. So I would agree that something fundamentally shifting in our perspective of economics has to happen. I would agree with that. Thank you for your comments, David.
Okay, so I just have a quick comment. It's not even going to be a question. You know, as a post-Keynesian, I've heard a lot of what was discussed today on monetary policy, and I see that there's a lot of, then overlap between what certain post-Keynesians say and what I've heard a lot about today. And one thing I'd like to bring your attention to is, and this is not about gender, but it is about income distribution. How people like John Smithen and Marc Lavoie, Marius Echerecci, and myself, we've written on the interest rate as an income distributive variable in itself. And that can lead into a discussion about wealth impacts as well, gendered impacts. I just want to be a bit provocative here, because I've heard it twice about asset-based reserve requirements. And some of the more radical post-Keynesians kind of reject that idea. It doesn't work, it's pointless. And so perhaps we can visit the question in another webinar, because I think it's fascinating how some feminists are looking at that article, at that argument by Tom Pally, but at the same time how other post-Keynesians are sort of rejecting and resisting that idea. So it would be interesting I would love to hear more about the feminist perspective on that, and maybe we can get a good dialogue going. That's it. Thank you very much. Sylvio?
So thank you everybody for the webinar today. It was wonderful, good presentations, great questions. So thank you, Elissa, Brenda, Melanie, and who I'm forgotten, Guillaume. Sorry to forgot you. And Brenda and Louis-Philippe, everyone. So thank you. In 15 days, we will have another webinar, right? On another session of our book. So please pay attention to Louis-Philippe Rochon Facebook. He will be advertising it, and hope to see you in another of our webinar series. Thank you.
Bye-bye, everyone.
Thank you so much, everybody. Bye.
Bye.
Thanks, LP.
You're welcome.